BMO Chief Capital Markets Chief Strategist Brian Belski. All right, Brian, there was even a piece in the Washington Post that's even admitted that Joe messed up on this. Apparently, he tried to clean it up afterwards. He met with the media, saying he meant really more of a transition. But we know his animosity towards fossil fuels, and I do worry it could hurt the economy sooner rather than later if he's elected.
Yeah, we would agree, and thanks so much for having us on. And remember, the energy sector's had a terrible go of it year to date anyway. From an investment strategy standpoint, for the first time in history, the S&P 500 energy sector actually dipped below 3%. Now, the contrarian in me says that is an exceedingly positive manner and signal to get into the sector. It's a bit of a value trap right now, but I mean, clearly with supply being still high and the way that we as a country are moving more and closer to energy independence. Energy is an important part of industrials, resources, parts of technology, and I think it was way understated about how important those comments were from Joe Biden last night.
One of my main stock ideas, investment ideas, if there's a Joe Biden presidency, is a company called NextEra Energy. And here's why. They got billions, and I'm talking billions in subsidies and loan guarantees from the Obama administration. The stock went from 50 to 300. It's more valuable than ExxonMobil. So my question to you, do you ever buy stocks or make investments based on the notion that they're getting pumped up by government?
No, but I'm so glad you brought this stock up because you may or may not know this, but this was a hedge fund darling, Charles, in most of 2018 and 2019. And you and I grew up learning that utility stocks were low beta kind of value stocks. This is a growth company. And the reason why it's a growth company is the momentum that has been fueled into it thanks to the hedge funds. I mean, the beta on this stock is up huge. Now, the stock went down pretty dramatically in March. I had the opportunity to finally buy this stock. It's a stock that I've been looking at for a while just because of the business, the renewable energy part of it is where the growth side of it, but you have Florida Power and Light, you got Gulf Power, and from a management perspective, it's one of the better managed utilities, so I've been waiting to buy it, but you're exactly right. But you have to also understand, this was a momentum name, and it was really driven by hedge funds, and that's another layer that I think people need to understand.
Wow, I did not know that. Thanks for bringing it up. We often talk about Wall Street, how they cop out for missing the big moves. And now this year, of course, they've been complaining about the Robinhood traders who are up about 46% versus 6%. But for many years, anytime the market was higher, we would have people say, well, it's because of the buybacks. Well, Brian, this year buybacks have tumbled significantly, only $204 billion. The S&P is higher. By the way, in 2018, $717 billion in buybacks. The S&P was down 6%. So aside from all the excuses, what's the better way of returning capital for companies to these shareholders? Is it through buybacks or is it through dividends?
We think it's through dividends right now, especially given the fact that, buybacks are a bit of a dirty word. And I think people are going to be really scrutinizing that. But dividends, dividend growth and income are going to be exceedingly important themes for the next 5 to 10 years. If the Fed truly is on hold for 3 years, you need to get income somewhere. And we've been advocates of having equity income as a standalone asset allocation sleeve. Think about this. You have 80% of tech stocks actually paying dividends. You have financials that are putting out capital that way as well. Right. Financials are one of the biggest or largest dividend growth areas in the world. So we are positioned as a country and our companies here to increase our equity income.
Brian, we covered a lot. I appreciate it as usual, and I always learn something. Thanks a lot.